This is the Alternative Investing Advantage podcast from Advanta IRA, where we show you how to explore investments beyond Wall Street and open your eyes to new options for your portfolio. It's time to take control and give yourself the freedom to choose where you invest your money.
Thank you for joining us today on the Alternative Investing Advantage podcast. My name is Alex Perny. Today on the download, markets are poised for another up day and relatively positive season. So far, the earnings season has proved to be rather profitable for most companies that have reported yet. However, we still have many left to go. Some of the notable ones that have seen a fall in stock price are Procter & Gamble, facing the issue of supply chain issues and rising cost of goods. So companies that utilize lots of raw materials or have large import factors are starting to see some of the effects of COVID-related backups at ports that we've all kind of been hearing about through the news. Oil has been another one to watch. OPEC has been eyeing an $85 price point per barrel. However, output issues have remained, and more concerns regarding real estate investment in China have been pervasive in some of the markets as well. Chip shortages have continued to plague different manufacturers, and Chinese retail giant Alibaba has unveiled an in-house chip to help to try to boost its cloud services, which is going to directly be a target to Amazon, Microsoft, AWS, and things like that. So definitely something to watch out for with regard to tech stocks, especially for enterprise tech. However, mainly the US-based Intel and IBM have not seen as much of a downturn as we might expect from the silicon shortage that has been plaguing these markets and things like automakers for the past year and a half. Gold rises on the weaker US dollar as compared to inflation. So that's something that's being interesting to watch, along with the consumer pricing index continuing to rise. Now, this doesn't necessarily mean everyone is going to be pumping up the gold markets. However, the market rise has been indicative of what we have seen with the inflation indexes that we have been watching for a little while now. In the news regarding legislative issues in the United States government, infrastructure bills and the large reconciliation spending bill are still stuck in committee in the House of Representatives. Not too much has moved on them so far, although we are seeing some movement in the back and forth between Democrats and Republicans on the matter. If you'd like to learn more, we do encourage you to go to our website, advantaira.com, for the latest on legislative issues and how it might affect your retirement, as well as going to Hands Off My IRA as well, if you'd like to take action and get a little bit more involved with helping to try to fight some of the legislative things that might greatly affect IRA investments in the near coming future. This has been The Download. Today on the What Is, we're going to cover an interesting one that people might just kind of take for granted in their everyday lexicon, but what is NASDAQ? NASDAQ is a global electronic marketplace for buying and selling securities. It was created by the National Association of Securities Dealers, which is now known as FINRA, the Financial Industry Regulatory Authority. The marketplace was created so that investors could trade securities on a computerized and fast program. This is one of the first fully computerized exchange markets to be launched, and it was launched back in February 8th of 1971. NASDAQ stands for the National Association of Securities Dealer in Automated Quotations, just abbreviated to NASDAQ, however, and it trades pretty much the world's foremost largest companies and tech companies, things like Apple, Google, Microsoft, Amazon, Intel. Almost 1 in 10 trades in the entire world, in the world of securities, is traded on the NASDAQ. So it's an extremely large exchange that facilitates the buying and selling of publicly traded securities. It's headquartered in New York and also integrates with OMX. Now, the company is listed on the NASDAQ, underlying the symbol NDAQ, has been a part of the S&P 500 since 2008. So the NASDAQ itself is even part of the exchange of Standard & Poor's 500. This has been The What Is.
Thank you, everyone, for tuning in to another episode of the Alternative Investing Advantage podcast. We are joined today by Gino Barbaro of Jake and Gino and a multitude of other platforms. Thank you very much for being with us today, Gino.
Alex, appreciate being here. Thanks for having me on.
Absolutely. So I always like to start out any of these podcasts with what is the most interesting way you ever found a deal? I know they're not all just plucked off of LoopNet. So tell us the most interesting one that sticks out in your mind of your real estate investing career, of that one that you like to tell when everyone sits down to chat it out.
There's been so many, but one actually just recently happened about a year ago. We have a website, Jake and Gino. I get a chat from a broker named Norma in Chattanooga looking at it. And we sell education on the Jake and Gino website. It's not Rain Partners. It's not our syndication company. And she says, do you guys buy real estate? Friday afternoon, I call it right back up. Norma, what you got for me? Beautiful 48 unit property. I call her on the phone. I say, listen, Norma, Jake is in Knoxville. He will meet you at the property next week. Jake goes out Tuesday, walks the property with Norma. Beautiful 48 unit property, since turned into a 50 unit property. We bought it for 40 a door a year ago. We're going to refi that thing out actually this month. And it's amazing what happens when you have a little bit of SEO and you're willing to strike quickly. Because if I had waited a day or two, Norman may have said, you know what, I'm going to somebody else. So the moral of the story is you never know where leads are going to come, whether it's direct to owner, whether it's a property management company that can send you a lead. Brokers are really the cream of the crop. Inquiry from a website. I mean, could you imagine that? A banker, they come from all places and all locations. But you know what, Alex, the key to the story is you just got to follow up as quickly as possible. And you have to put your best foot forward. And if it means getting on a plane and flying out in 2 days in this market, that's what you do. Because for us, those deals like that are life-changing and they're very difficult to come in this market. So when somebody chats on your website, chat right back.
I can imagine just the need to be prompt and efficient when following back up on anything that you get in today's market is paramount. It's everyone's always saying the real estate market's so hot right now. Well, the best way to do that is to be punctual and precise in getting back to people, because that next deal you may have to work infinitely harder for that next one. So that's always a good one to kind of get things started to let people know the flavor of the episode today. So I like to give you a little bit of
Alex, let me take that a step further though. What's more important about it, do as you say, do what you're going to say and say what you do. Norma just reached out to me the other day. She's got a little 20 unit property in Texas. It's not appropriate for us, but guess what? A Jake and Gino student is going to get that deal. And she has other deals in Tennessee. So when the deals are there, she's going to be sending us deals. It's all about the relationship. She knows that we're closers and she knows that we execute quickly. We're not going to waste her time. Brokers are busy. They can't be wasting their time with tire kickers. So that's really, really important, everybody. Put yourself in their shoes. They don't get paid until they sell the deal. They need to find the Alexes and Ginos of the world who are going to execute on that. And when they do, guess what? Alex and Gino are going to be the first ones looking at that deal, and we have the first crack at the deal.
And the great thing is that the lessons that you learn in real estate can transcend whether it's single family or multifamily. I just had a great single family guy, Peter Fortunato, on the other day. He's been investing in real estate since the late 60s from Bethany, Massachusetts.
Amazing dude. Yes.
To Florida. And his statistic, one of the best thing I took away from the conversation with him that I've heard repeatedly is he's done over 70 deals with only 6 different families. He's done obviously ones outside of that, but just the relationships, the Normas that you find. He was able to do one deal with a guy that he has done 10 if not 20 deals with him just by going to a variance meeting in a city and was the guy that could make the deal. He answered the phone. He made it possible for that to happen. And it just continues to mature. Those kind of relationships are what every real estate investor needs to focus on. So that's great that you would come out of the gate swinging with just that. It just solidifies that point so well. Now, I know you haven't always been involved in real estate. If some of the background I have on you, you've actually have your hand in restaurants as well. So how does Gino Barbaro go from being involved in restaurants and pizza to now having $100 million worth of real estate under administration with your company?
Well, let's get a little bit even more clear than that. I had one restaurant with my brother for 20 years.
Awesome.
I loved it until I didn't love it. And for all of you old timers out there, when you've seen a couple of market cycles, owning a small family business in the 90s and 2000s, early 2000s, I'm going to say it was kick-ass. You could make a great living. You didn't have the competition with the internet. Eating habits were a little bit different. Our habits were different. Once the light switch went on in 2008, all of a sudden the internet took over, the Great Recession took over, our habits completely changed, and I became desperate. I had to do something else. I read a book by T. Harv Eker called Secrets of the Millionaire Mind. And I wanted to punch him in the face as I'm reading the book. I'm like, this dude doesn't know me. But then I'm like, wow, you know what? He's right. My fruits are in my roots. I'm responsible for what I have up until this time period. And I needed to look for an alternative source. I had dabbled in self-storage. I had dabbled in mobile home parks, lost money there. And 2008, I said, I can do this multifamily thing. I like dealing with residents. I like owning little buildings. That's where I started. And then I just got educated, became, I don't want to say myself an expert, but I got coached and I needed to learn the space. And I met Jake in 2009. He was a pharmaceutical rep, getting drug orders, pharmaceutical orders, food orders out of the kitchen at my place. And I was delivering them to doctors' offices. 2011, he moves down to Knoxville, Tennessee. I'm like, Jake, there's some deals down here. Let's start looking at some deals. It took us 18 months to find that first deal. And when we found, as they say, the rest is history. It only takes one deal. I mean, you either do 0 deals or multiple deals in real estate. You don't just do your first deal and say you call it quits. Because after that first deal, it's like, wow, that wasn't that hard. It was stressful, but I could figure this out. It's not rocket science. And that's what happened with Jake and myself. So from having one restaurant with no systems, being a burned out mom and pop owner, to now owning over 1,500 units, buying from mom and pop owners and actually implementing systems, it's been a really, really big turnaround for me. But I just understood and realized that you need to become an entrepreneur. And at Jake and Gino, at our education company, we teach people how to become multifamily entrepreneurs. And it's the same whether you're fixing and flipping a home, whether you're in self-storage, whether you're in commercial, whatever it is, you need to look at it as not just a real estate and a deal and land and asset. You really need to look at it as a business.
Yeah, and each one of those deals can honestly be looked at kind of its own business in and of itself. Like you just said with Norma, you have that whole relationship and business centered on that. Maybe she likes a phone call. She doesn't check her email. You get involved with someone like me, and if you're not texting and emailing me, I'm probably not going to get it. So it's kind of looking at them all individually, but all as a relationship, all as a business, and that's so, again, pervasive is the best word that I can use for it, of hearing, investors from the single family to the multifamily, commercial, mobile home parks. It's all about relationships. And I think if people can kind of get that and understand that, you can make it work in any of those different spaces. So I want to say congratulations. You've been doing this now for 10 years. I just kind of realized that when you mentioned 2011 is when you linked up with Jake and started the Jake and Gino empire, if you will, is a better way to look at it. I mean, you have so many different things going on between Rand Capital, Jake and Gino, your podcast, your live events. So, all that certainly is looks great. But have you had any kind of setbacks or things that, you've learned along the way of doing this that you might like to, give out there for people to kind of look out for so they don't maybe trip up on the same things you have?
There's a couple of things. The first thing I'd like to say is if anybody wants a copy of our Honeybee, just email me, PDF copy, gino@jakeandgino.com. The reason why I'm mentioning this is you had mentioned something. We call it multifaceted multifamily. And what you had said when I, fist pumped you, every deal you buy is its own little income generating asset, its own little business, a 25 unit here, a 30 unit here. You can multifacet each business. And if you're in the single family space or self-storage, it's the same idea. We call it the Rand family of companies. We have a Rand power wheel. We have the asset, the investment we're buying, right? And from there, we have multiple streams of revenue. We didn't realize this in the very beginning, but all of a sudden you own a property management company, you start managing those properties, you have one stream of revenue. Then we decided to write a book and start a podcast. I didn't even know what a podcast was 6 years ago, but Jake's like, hey, you want to start a podcast? Sure. The education company's born. Then we have a syndication company. Rand Partners is born. Now, Rand Cap, we started doing loans. We decided to shutter that business. That's a difficult business to get into. Learning lesson, but you got to try it. Now we created something called a 100-year real estate investor, where we love whole life insurance, creating whole life insurance, starting those assets, building a dual asset policy, borrowing from the policy, investing into real estate, paying back the policy loan, having those two assets instead of just that one asset of the real estate. For me, the big learning lesson, though, is once you get in, be crystal clear and have all these complementary streams of revenue focused on your core business. I'm not going out and buying a car wash business unless, of course, maybe I'll buy the real estate that is in conjunction with the business. I want to really stay focused on the business itself. So the education feeds the multifamily, the syndication feeds the multifamily, the 100-year, the real estate investor, that whole life feeds the multifamily, because a lot of our students need that protection, need to estate plan. So it's such a beautiful symbiotic relationship. And I'm here to tell you, we all need to adopt that 100-year mindset, the responsibility, person of character, hard work, the long term. When you buy a whole life policy, it may take you 3, 4, 5 years before you get back your cash flow, your cash. But the problem is, that's what business is like. Did you ever start a business and you go cash flow positive from day one? Probably not. It takes you a couple of years. And that's the thing. You really need to stay focused long term. You made me chuckle when you said the Jake and Gino empire. We sure as hell didn't start out with empire. It was a real little trickle. But 1 year, 2 years, our first live event, I remember in November of 2017, we had 175 people. Have no idea how we even had 175 people in a room, but we did it. The next year, we got a little bit better. We had 350 people. MM3, the next year in 2019, 500 people. Now we have MM4, and I know you're going to be there, Alex, October 23rd and 24th of this year. We already have 620 tickets sold, probably going to 750 to 800. So, you start off with a trickle, and then eventually, as you adopt that 100-year mindset, and you think long-term, think in years, maybe even a decade. Don't think in days or months or quarters. Think in years, what you can accomplish. And like you said, I've only been doing this for about 10 years, and I've been able to amass an amazing portfolio. There's 2 reasons. I've had that long-term mindset, and I've had an amazing partner, an amazing team. So my big takeaway for everyone listening to this is set your plans, be intentional, but always focus on the long term.
Absolutely. And so much of what we like to do is educate people on how they can deploy their retirements. The alternative investing advantage is the advantage of investing in things besides what's on Wall Street, besides just, hey, let me pick a few securities and throw it at the wall and see what happens, and really kind of getting out there and investing in tangible stuff. But where does that come from? Well, the big part of it's education.
Yes.
You want to tell people, don't have the analysis paralysis, don't just learn everything but not implement it. But one of the cool things about being able to have people like you on is you're the big on the education side. You're showing people how to do this. You're not just kind of keeping it squirreled away and saying, hey, look at me, I made all this money in real estate. Well, how'd you do it? Well, I figured that out. That's not for you. What was kind of the beginning part of starting the live events? I think you said 2017 you started, you had about 120 or so people there. What happened in 2016? What happened the year leading up to that, to where you and Jake said, you know what, we're making money, we've done all these other kind of things. Let's do a live event. Was it someone saying, hey, was it someone sitting at a bar at a hotel lobby saying, hey, I would pay to come see y'all? Or was it something more grand than that? Or was it something as simple as just a conversation over dinner?
That's a great question. I don't even know how to answer that. I think the reality was, in March of 2016, I quit the restaurant. I left the restaurant and I was financially free. So I'm like, what do I do next? I really have no job. Jake's running the property management day to day. How do I add value to this relationship? Well, let me start a Jake and Gino education company. And what I loved about it was every week, now we have 4 podcasts weekly, but when we first started out, I was able to talk to gentlemen like Robert Kiyosaki and T. Harv Eker and Cameron Herold and Sharon Lechter. And I'm talking to them weekly. And the value that you derive from these people every week, the fact that I've got to read their books and be prepared for their podcasts, I was learning so much as an investor. So I started out wanting to monetize the education business, whereas the education business monetized our other parts of the business, because we're continuing to learn how to grow a property management company, how to scale a portfolio. So it was selfishly wanting to make money, but then realizing, holy crap, there's a lot to learn here. And I'm learning and I'm becoming better at my craft. And, a couple of years down the road, I remember writing hundreds of articles, doing hundreds of podcasts, really spending years and years to build the education up to where we are now, to where, where we can sell an event to 700 to 800 people. But that's not the ultimate goal. The ultimate goal is to help feed all the other businesses to learn as much, And then really to give us the credibility in the space so that if a broker speaks to us, they know us, to write tons of books so we can continue to educate. And, I think the ultimate answer to that question is I used to live in a place of scarcity when I had the restaurant. My father was an amazing chef. He never told me his recipe to his Italian cheesecake. Old Italian guy. I want to kick his ass. I'm like, Dad, what are you putting in there? Mine's a little different than yours. I'm like, dude, everything was proprietary back then. It's not the same that way. And everything is open source. Everyone can get educated. The difference between the education and the implementation is Jake and Gino. We're not only going to educate you, we're going to hold you accountable, and we're going to teach you and implement you. Our students have done over 20,500 units to date, over $1 billion assets under management. That's education and implementation. Education times action equals results. That's what I learned. And there's so much abundance out there. Whether I teach a student to do a deal and I lose a deal from that student, there's going to be another student coming around going, hey, you guys want to partner up? Sure, that'd be great. Or we have students in the community that want to we're raising money and they want to invest in our deals. There's so much abundance out there. And the fact is, a lot of people can't do it on their own. And you create these relationships. There's so much, value and benefit to it. Step back and ask yourself this question. Are you living in a mind of scarcity like I was? Or is there some abundance in your life? And once you start living that life of abundance and you read the Bob Burg Go Giver and you start seeking to serve instead of giving to get, I will promise you your life has completely changed. So from starting Jake and Gino, from wanting to monetize it to all of a sudden teaching others. And let me tell you, Tony Robbins talks about your 6 basic human needs. The first 4 are fundamental. The last 2 is growth and contribution. I will promise you, everyone listening to this, once you start contributing to other people's lives and you start getting emails about, hey, I quit my W-2. Hey, you helped me refi a deal. I had a student last week, 25 years old, was working in a factory making $35,000 a year. He bought a deal in 2019 for $359,000 seller finance. He just sold a deal 2 weeks ago for $1.4 million. He netted $1 million on a deal in 2 years. It would take him 30 years working at a factory to make $1 million. And he did that in 2. Do you think I changed his life? Absolutely. I'm not saying just me, but the idea, the mindset. Now, all of a sudden, he's 27 years old. He is free. He can do whatever he wants. How amazing is that? And that makes me feel like I'm contributing to somebody's life. And that's what the power of educating others is. That's what you should be doing as an educator. It's not just about making the money, but about empowering and changing other people's lives. And I'm learning from their stories. That's the amazing thing. I don't know everything in real estate, especially multifamily. Every day there's a new challenge. The market's changing. Rates are changing, inflation. And I'm able to talk to whether it's Dr. Peter Linneman, who's an economist, or Sharon Lechter, we spoke to last week. Being able to tap into these people and to learn from them, it's just going to continue my growth, and it's going to help me continue to help others grow alongside me.
Well, and I think that's a great segue kind of into the next part of this, where I always like to get a gauge on, the past 5 years to current to maybe the next 5 years, and talking about market changes. Interest rates are kind of, everyone wants to talk about it right now. I mean, they are, how low can they go and what kind of effect that has on your market. But over the past 5 years, going back 5 years, what is kind of the biggest paradigm shift you've seen in the multifamily market from 5 years ago, that's today? And then where do you see some of those changes going? And in your plan, what do you see kind of happening in 5 years with the market for multifamily?
Let's go back 10 years when I started.
Sure.
There were deals on LoopNet. Problem is there was no Jobs Act. The Jobs Act came out in 2012. It allowed a lot of companies to be able to raise capital. 2013, 14, 15, still a lot of deals out there. Syndication starts taking off. And all of a sudden, cost segregation comes in. It's macro accelerated cost recovery. All the lawyers and doctors are starting to drool because they can get some passive losses, and cost segregation for operators like us, it's a windfall. You're seeing cap rates starting to compress, money starting to flow. They're flowing from commodities. They're flowing from other markets, other countries into the U.S. It's a viable business. We've seen cap rates compress. We've seen cash flow and cash and rates of return compress as well. Problem with what we're seeing nowadays, everyone knows there's rampant inflation out there. And the problem with the CPI, Dr. Peter Linneman described it perfectly. They don't measure asset inflation, right? That's part of the problem. 25% of all the CPI growth last year was used cars. I don't know. Did you buy a used car? I didn't buy a used car, so that didn't affect me. So that's a pretty useless number. We know that our stuff is going up. And ultimately, when you are the Fed and you know you need to continue to keep the banks propped up because you don't want to happen what happened in 2008, you're propping up the banks and you're giving the banks all this money. What are the banks going to do? Well, if the banks are Beavis and Butthead, they're going to buy AC/DC shirts and other crap. But the banks are the banks, and they're going to lend money. They're lending money to asset purchasers, people purchasing assets. So anybody out there that thinks that asset prices are going to completely crash, they're living in a la-la land, unless interest rates go to 6, 7, 8, 10%, then we're all done because in countries, we have a problem with debt, but emerging markets have an even bigger problem with debt. So we really have to be careful with interest rates. People are not looking at that piece of the puzzle. Asset prices are going to continue to rise. They may stabilize. Now, the one thing I would say to everybody out there, caution is, be careful what kind of assets you're invested in. If you're invested in older C workhouse forcing assets that have a lot of capital expenditures, those may take a little bit of a hit, but those newer assets, they're going to take less of a hit because there's less risk in those newer assets. So just be careful. I wish I can go into the 3 pillars of real estate with market cycle, debt, and exit strategy. Just be careful what type of assets you're going to own. And one last thing, Peter Linneman said that was really impressed upon me. It makes a lot of sense. He says, think of investing in decades, not in a year or 2 years. The next 10 years, what's going to happen? You're going to have 2 really good years, 2 crappy years, and 6 years that are so-so. So when you're looking at a deal, are you able and willing to hold that deal for the next 10 years? You're not trying to time the market. Can you lock in interest rates? Is there going to be rent growth there? Is it going to be a good market? Is the asset new enough where it's still going to be viable? Is the market in a path to progress? All these things are very important. So you have to adopt that long-term mindset and buy an asset that you're willing to hold for 10 years. Doesn't mean that you can't exit in 2, but just be wary because we can't time the market. As an investor, if you try to time the market, you are dead. When the market is hit an all-time high, you look back and go, oh, that happened then. That's the only time. So as a long-term investor, you need to invest for the long term by buying quality assets that are going to cash flow for you.
Now, when you say long-term, obviously that means something different to everyone. What would you say is just kind of a throw it at the wall number for long-term? Is it 5, 10 years in multifamily?
That's a great question. I mean, people were buying deals 5, 6 years ago. Their hold rate was 3 to 5 years, and they were flipping out in 2 years, getting a 20 IRR. Now the market, the last year and a half, 2 years, people have been holding it 18 months and maybe doing 12, 14, 16 IRRs. It really depends what happens with the market cycle. You're seeing operators that are going into this period where they may have to hold a little bit longer, an average of 5 years. We don't syndicate deals. We buy our deals. We want to buy and hold forever. That's where the value is. Not buying these deals, fixing them, flipping them, and then going out and trying to look for another golden goose, where in this market, it's very hard to find a golden goose. I'd mentioned to you that 50-unit deal. That deal, we're going to hold forever. We're going to refi that deal out. We have cost segregation benefits, and we're going to manage that deal forever. If I have to go look for another deal, you know how hard it is to find a deal in this part of the market? So for us, buy and hold is a long term. But I'm thinking for the average syndicator out there, you're probably going to have to be holding these assets 5 years. In this part of the cycle, because if we do get a little bit of a downturn, a little bit of a tick, you may have to hold that a little bit longer for your NOI, for your rent growth to continue to escalate.
Yeah,
does that make sense?
Oh, it makes absolute sense for someone like you that maybe has the little bit more established. You have those other kind of branches off. You want to hold it because you can make money on the rent, not only the rental stream, you can make it on the backside with management if you have a management company.
Yes.
Then let's say you get into something like educating people. There's so many different parts about it when you have a more mature portfolio like that. But if you're getting into it, yeah, absolutely, you don't necessarily have that. You're looking just kind of on your IRR and the cap rate of the deal, not necessarily so far down the road. So yeah, and from what I've been hearing, I talked to an investor that has a fairly decent portfolio, and he's out of Dallas, Texas yesterday. He was saying that he just shifted his strategy from about a 2 to 2.5 year exit to just putting everything that he's doing for the next year at 5. Mm-hmm. So he's like, look, I'm just going to shift everything to 5. Worst things come is that I continue to have cash flow, and I'm not making that big fat back end of getting out of something, but I have cash flow, and I've kind of hedged my bet on that because at least with what we're seeing from a lot of different people that are talking to us, interest rates, they can only go so low. They're going to adjust and have to go up at some point. So trying to get ahead of that is obviously going to be good for a lot of people.
Alex, I'd like to impress upon a lot of the listeners, though. We teach buy right, manage right, finance right. What I think everyone needs to do is on the buy right criteria, figure out what your business model is. What may work for us may not work for others. Some people don't have the time to, invest in these deals full time yet. They're still working their W-2 job. Maybe a syndication and part-time works well in the very beginning. But I will tell you, the way to wealth in real estate is by buying and owning these assets long-term. But you need to start somewhere. We started with a crappy little 25 unit deal. We refinanced that property out. We still own that property. It pays us $8,000 a month, every month. That's how my kids are going to college. That little crappy deal. I have 6 children, by the way. One's already graduated college. The next one's up. That deal is paying my kids. But you make a great point. If I needed the capital, I would have sold that property and I would have traded up into another property. Not going on vacation, not bought a car, not bought a home, but continue to invest into the real estate and trade up and buy a better quality asset, a bigger asset. That's very important if you're going to be in real estate, trading up those assets. Sometimes you don't have to hold them forever. Just trade up, buy newer, buy bigger.
Yeah, absolutely. Because people don't get into real estate to just do 1 or 2 deals and then go back to work. They don't go back to their W-2. It's not, oh, this was fun. I made a couple bucks. Let me go, back to working at Walmart. It's the life cycle. You get out of having that W-2 job. Well, how do you do this for the rest of your life? And it's continuing to trade into deals, to get into new deals, more deals to help increase and elevate yourself within whatever your criteria for that is, whether that's having, $10,000 a month in cash flow, or whether that's making, huge cap rates and big returns. It's whatever works best for you is, kind of what you're trying to focus on. So to kind of bring this in for a landing, we'll certainly get to the education point of what you have going on up next. But what is one habit that has helped you the most in your industry?
I think the habit that I was ingrained with at the restaurant, my parents, who were both immigrants, is hard work. Everything is hard work. And I think that's the habit. I mean, I'm going to email the broker back. She sent me a 20 unit deal this morning, got on Facebook, asked the students, connected her to 2 students 20 minutes later, working hard. Now, when you transition, you need to start learning how to work smart, but you just can't wake up one day and I'm going to be a smart worker. You need to put in the effort. You need to put in the work. You need to learn the business. And then once you've learned the business, it's time to start delegating. I don't do bookkeeping anymore. I don't edit podcasts anymore. I don't write certain articles anymore. I have people helping me, but I needed to start doing that myself to experience it. With the property management, it was the same thing. We started managing our properties from day one because we wanted to property manage and control it. My partner, Jake, loves property management. So he took over that aspect of the business, and I'm out here, third-party management. I'm in New York. I've got nothing to do. That's why we started Jake and Gino. So for me, that was one of the reasons why. But really, it all comes down to working hard and having a purpose of what you're doing. And then once you figure out the hard work, it's time to start working smart and scaling up and start delegating certain tasks that you don't need to do anymore and taking on those tasks that will generate revenue and that will actually fulfill the vivid vision that you have for your company.
Absolutely. And people always wonder, hey, where's a good place to start? I tell people, talk to people that have been doing this, join a local RIA, go to an event like you have coming up with the Multifamily Mastery, because even if maybe the content of what's being presented isn't where you're at yet, I guarantee you there's people in that room that are going to be in the same place you are. Go to a networking event, just ask, be like, hey, here's where I'm starting at. And you would be amazed at how willing people are to help other people if you just simply tell people what you're doing, because everyone started from somewhere. And every single person didn't start with a $100 million asset portfolio to manage. They started with one property and one deal. And I can almost promise you, going to some of these things, you will find people in the same place. So tell us a little bit about what the Multifamily Mastery event is in Orlando. You got coming up at the end of October, and we'll bring this thing in for a landing.
Sure. The before I even answer what MM4 is, you had a great question here. You had one thing that holds people back, not even in our industry, but in every industry in general. And I'll tell you, and then I'll segue into MM4. Mark Twain has a great quote, and Mark Twain basically says, it's not what you don't know that holds you back. It's what you know for sure that just ain't so. Now, what do I mean by that? You're looking at multifamily and you're buying single family homes and you're saying to yourself, I can't qualify for the debt. I don't have money for the down payment. These deals are too big. That may be true, but not really. Because Jake and I had those same thoughts in the beginning. But when I became educated and I got coached and I got mentored, I learned, wow, creative financing. Wow, syndication. Wow, partnering. All master lease options. There are so many ways to get into multifamily. But if you don't get educated, you're not going to know. Those are your limiting beliefs. And that's why it's important to go to live events, because you're going to see others. You're going to see a pizza guy and a drug rep go from 0 units to 1,500 units in 5 years. And how do they do that? It's not rocket science. There's a lot of people in real estate who really aren't that smart. They work hard. They figure it out. There's a framework, buy right, manage right, and finance right, and they follow the framework. And they understand that it's an entrepreneurial venture and that's a business. So MM4, Multifamily Mastery 4, it's October 23rd and 24th in Orlando. I know you guys are going to be down there. We're going to have about probably another 15 to 20 vendors, sponsors there. We have our entire team there. Right now, we're over 600 tickets. We're expecting between 700 and 800 attendees at this event. Like I said, our last one was 500. So massive success, a lot of fun. We're going to be teaching buy right, manage right, finance right. Motivational speaker is going to be there. It's a lot of fun. We call it the financial vacation for smart people. It's the perfect time to be in Orlando. You're going to be 5 minutes from the parks. Come with a family, bring your significant other, spend a few hours at the event, then go to Disney with the family. I'm telling you, it's a great time of the year to be there. And it's a beautiful venture. It's a beautiful venue. It's a Gaylord Palms in Orlando.
Great. How can they find it? Just jakeandgino.com so where they can sign up for that?
Yep. It's jakeandgino.com/MM4, or just go to the website, jakeandgino.com. There'll be a landing page for you to go check out information. And like I said, if you have any questions, just email me, gino@jakeandgino.com. I'll send you to book the Honeybee. It's a business parable. You read it in 2 days, read it on the flight down to Orlando, and I guarantee you will enjoy it. It'll be a lot of fun. There's nothing like being in a room with 700 other people who are in the same business as you and who aren't excited and who aren't telling you you're crazy for getting into real estate and real estate's risky and where are you going to find the money? There's different questions and answers going on in that room. I promise you.
Absolutely. Well, thank you very much, Gino Barbaro, for being on this iteration of the Alternative Investing Advantage podcast. We appreciate your time today because just by talking to you, I can tell you are a very busy man. So thanks for taking half an hour out of your day to help try to bring some information and maybe spur some people into action on today's episode.
Thanks, Alex. I appreciate it. Take care, everybody.
Bye. Thank you for tuning in to the Alternative Investing Advantage podcast. Tune in next week for more investing tips and strategies.
Want to hear more episodes of the Alternative Investing Advantage? Search podcast at advantaira.com and subscribe.